Yo, what's up you guys? Welcome back to a new video, and today this is going to be an update on the dollar index, the Nasdaq, the Dow Jones and gold. We've got some flash services PMI data coming through here. If you are new here and you don't know what flash services PMI is, I've made a lot of videos that you can find in the educational section. Now, before you get excited, the flash services PMI, it is like when you've gone to school before, right? And you get your results, your January, your February. It's not a true indication of your actual performance. It's basically just an indication of what we think is going to happen, unless you start listening to Temple Boys and then you go from hero to zero. But that's for you to decide. So without any further ado, let's jump straight into the information. So flash services PMI is coming through today, and as we know, anything below 45 is not as expected. The dollar index hasn't moved much. A lot of questions has come through, people asking me, hey, is there a safe time to trade the dollar index? No, it's not, because you didn't get any movement. However, there is some corrections currently taking place that you can make use of. Also, what's good to see in the market at the moment is we can see how most of these currencies, even though the dollar index is not moving, the currency is trading against it, or indices and precious metals are still making moves, which is good to see, because it means that we can get a deeper correction, which is what we're currently seeing taking place on the Dow Jones. But we're not going to drag this video because it serves no purpose to drag it. I do want to give you guys some trading opportunities that you can make use of, not on the index, but obviously from the Nasdaq. And I'll tell you why we can't look at the index yet. So if you go on the daily time frame, you can see that the market has basically been flat. Okay, if we start here, the market came in here, weekly support got tested. There we go. You guys remember, I still did the breakdown, and I said we can anticipate that move to the downside, which is exactly what the market had done. Now we go on to the daily time frame. Now what do we see here is we can see this market has still been trading sideways. Sorry, that's the 4 hour. Here on the daily time frame, the market came into that level, printed the first green candle, gave some traders a hope that the correction was about to start to take place. Then what we can see over here is that for 1 2 3 4 5 6 7 8, almost 8 days, which is almost 2 weeks, the market has just been trading sideways. Now basically how fundamental data works, or basically how investors work, investors are just normal people like me and you. Well, they're not like us, because we over risk and we trade with lot sizes that we shouldn't, but they're more careful. So but they are normal people. It should be where I should be sitting and working, but they are just like me and you. They don't make they don't make trading decisions before they have a valid information. So think of it in this way, and I know most of you are still gullible out there, because you still spend a lot of your money into people that hasn't proven anything to you. But with investors, what you find is they wait for sufficient information before making a trading decision. What you see during a sideways moving market, a lot of people will say it's a liquidity hunt period, but it's basically where investors sit down and they wait 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 to see which way the dollar index wants to go, purely based off the fundamental data, because fundamental data is used to measure the long-term momentum of any currency. And technical analysis is not only used to get an entry, but it's also used for the short-term momentum, because the market prints in impulse, correction, and impulse patterns. Now the dollar index is still not doing anything. Again, I would like to see a clear break above that area, a pullback, and then potentially a continuation. This would give us room to start looking for selling opportunities on things like GBP USD, Euro USD, buys on USD CAD, buys on USD JPY as well. However, the stocks are now due for a correction, and I'm not going to waste my time to say this, but the Nasdaq is going to pull back, and you can expect this to take place. Now, I'm not saying this is going to happen because I say it's going to happen, but I'm telling you this is exactly what's going to happen. Obviously, you have to go down on lower time frames to look for a good entry. Hopefully, by the time that the Nasdaq had pulled back to the 0.382 and also broke above this massive impulse, came back to test it as a level of resistance that would then be turned support. Maybe by then the dollar index would have had a breakout. Gold is now back to pre-pandemic levels, my good friends. Yeah, you can see. We were here in August 2020. We were here, then we came back here in March 2020, and now we're back here in the starting edges of 2020. You can see if you just look left slightly that we're basically getting an equal high now. However, I obviously do anticipate gold to continue this move higher, but obviously not just continue the move higher, because in the market works like this. You get people that comes into the market and then they will buy the market, right? Then what happens is that you see here they come in and they buy at these low prices. The market then moves high. Now they take their profit, and as a result of that, the market moves lower and they buy it at a lower price. Now we do expect a pullback. Okay, we do expect a correction because that's how the market moves. Although we can see there was no correction, but the market moves in waves. The market makes a high, a higher high, a low, and a lower low. But that's too much lows and highs and stuff to talk about. It's just going to confuse you. On the daily time frame, we have probably one of the most confusing type of price actions, but we're going to use this to our advantage. Now you can see that we have a market now stuck between this strong level of support that got broken, that is now being tested at resistance. The market also now looks like it wants to break above resistance that would then be turned support. However, the dollar index is stuck within a consolidation, and I expect the market to continue that move to the upside to go and complete the findings of the level of resistance. So I do expect this pullback to take place, and I do expect this daily candle to close back below this wick that we have over there in the market. Yes, my friends, I'm recording this video through load shedding because I'm not so. I thought it was the end. I thought load shedding was done, but then the price of fuel is also going up. But it's okay. So again, I do expect gold also just to pull back, potentially just go back there, but I do expect this pullback to take place in the market here as well. Next up, we've got the US dollar index's favorite, which is the Dow Jones. Now, the Dow Jones price action, we have this massive impulse. After an impulse, you obviously expect a correction, and if you take your Fibonacci from the high to the low of this massive impulse, you can see we had a 50% pullback, which is a 50% of this massive impulse. Also, if you look left, you can see we have this structural level that the market created here as well. Now, this level over here acted as a strong level of resistance. The market broke above that, came to test it as support. Support did not hold. The market broke below support, came back to test it as a resistance. And you can see how the market is starting this move to the downside. As a short-term day trader, I'd suggest looking for short-term targets, potentially to this low. And then from there, we can once again monitor the price action from a different, as the news data gets released, and then we can make a further trading decision. Now, guys, that is it from my side. Thank you for your time. And as always, cheers for years.